So today I'm going to talk about the brand new UK stock I've been buying. I started buying this one a couple of weeks ago. I was supposed to do this video on Friday, but we ended up talking about WH Smith and the crash going on there. But today I'm going to go through this UK stock I've been buying about 2 weeks ago now, and the reasons why I've been buying it for you guys on a Sunday. By the way, if you guys are on Patreon, I am about to drop a earnings review on Aviva, gambling.com and New Holdings, so keep an eye open for that. And if you do want to know what I'm buying and selling in real time, like this stock here, and the two new ones that I also bought on Friday, the link is in the description. And apologies once again for the late video. The reason today the video was late is that at the moment currently building a patio in the back garden. Taking a little longer. That is a day's progress right there. Yeah, taking a little bit longer than what I thought. So hopefully tomorrow we have it completely finished off. I ended up deciding to do it myself. So not amazing for the first patio I've done, but not too bad. The reason why I'm doing it myself is to have it done. $3,000 I got quoted. $3,000, and honestly, the patio, the slabs, the sands meant I worked it out as maybe £700-800. So literally £2,200 for 2 days labour. Incredible. I am in the wrong profession. I tell you that right now. The money that some of these people must be making is incredible. So yeah, that is what I've been up to today. Anyway, so what is the new UK stock I've been buying? Well, it's a bit of a short. Really, it's not a short position, but it's a bit of a short to the UK economy. So at the moment, I'm sure you've seen insolvencies in the UK are jumping up. There's a lot of increased costs going on after COVID. There was a lot of protection out there for businesses, and all them protections suddenly got pulled in 2022, and then it was a free for all back on your own. And obviously a lot of companies at the moment struggling with the inflationary pressures, the big wage increases, the increase in corporation tax, obviously the NI cost at the moment. It's not good for the UK economy, and this is a bit of a company that would, if there was more issues with businesses, obviously not nice to see that, but obviously this company would benefit from that situation. And that company is Manolete Partners PLC. So probably a company you may never have heard of. This one was brought forward to me a couple of weeks ago by Lemon on the Discord group. I'm sure if you're on the Discord group, you know Lemon. Said I mentioned that I was looking for a company in this space. Originally I was looking at another company. He said that have a look at this one, and I had a look and actually went, you know what, this actually has a bigger risk to reward. So I do like this one here. Very small company though, so just be careful. 39 million market cap, so just be aware of liquidity issues, especially you trading to 1-2 users. This could be a tricky one for you guys. So yeah, just be aware of that. But yeah, I have started buying this company. It was the reason why I sold my Bytes technology position, was to put my money into this stock. So I am up on, to be fair, I'm up a good 12-13% on this position. It's actually been on a bit of a rally recently, and there you go. The perks of being in the Patreon, I guess. You get to know these stocks in real time. But yeah, I saw my Bytes position. There was also been on a bit of rally as well. You know, if Bytes, the frustrating thing with Bytes is after I sold there was insider buy-in and they'd done a share buyback. If they did that literally a week earlier, I'd probably still be holding that position, but you can't win them all. But there you go. I'm being transparent for you guys there. But yeah, even though on the long term, I would still expect Manolete to outperform Bytes. So I think Manolete could be a very good performer in the next 2 or 3 years. So what do Manolete do? So they are the UK's leading insolvency litigation financing company. So they purchase claims from insolvent UK companies, and they purchase the claim, so it gives them full control over the settlement. So if you look here, Manolete Partners PLC is a company that specialises in funding or purchasing insolvency claims to maximise returns for the creditors of insolvent companies. And if we have a look here, I've actually got a mix of it. So you can see here that it might be like a breach of duty, breach of contract, DLA, unlawful dividends, wrongful trading. So there's a mixture of what they might be doing, and the main creditor is HMRC, as you can see here. Now, what happened previously, and if we have a look and list this up to the financials here, this company was actually doing quite well previously, before the whole COVID situation. So if you look here, company doing really well, revenue growing, profit growing up, as you can see here. And then boom, as soon as we get to 2020, you can see there's been a massive drop, and you can see we're just kind of coming out the other side here. So why was the company doing really well, then we had a drop, and why is it just starting to recover here? And actually, if you look at the share price, we zoom out, so you can see here they came onto the market. Company used to be a £4, £5 stock, and you can see here recently the stock has continued to drop down 81%. And even though there's a bit of a rebound financially going on at the moment, the company still pretty much sits near 52-week lows. So anyway, getting back to the point is why was it a big drop off, and then why have we started recovering? Well, what happened, as you can see here, when we look at the current insolvency claims, you'll see there's a major drop off in 2020, and then you can see the rebound starting to happen here. So in 2020, obviously we had the COVID situation. Basically, the government went, "Hey, we're going to protect every business, going to protect all the jobs out there at the moment. We're going to make sure basically you can't go bankrupt." And because of that, someone like Manolete, litigation claims. Business aren't going insolvent, you're not going to have any claims to deal with. So there was a big drop off here. Then in 2022, basically the government went, right, you're back on your own again now. And as the years have gone on from 2022, whether the costs of COVID, inflation, or the extra costs that the governments have been putting on business now, there's been a massive surge up in some of these insolvency claims, as you can see here at the moment. Now, at the moment, they've got about 67% of the third-party funding. The rest of it here is law firms acting on a no-win, no-fee claim at the moment. So they've got plenty of market share at the moment that they're probably able to take going forward. Now, another wild card that you do get with Manolete is they currently have the Barclays BBL pilot. And what happened here is, obviously, during the COVID situation, the government and the banks basically toned down all the lending rules, criteria, and the checks. So there was a load of fraud where loads of people got COVID funding that shouldn't have got COVID funding. There's all that fraud case going on. So what happened is they went to Manolete and said, look, can you do a bit better job at the moment at getting some of this money back for us? And if you do, take on these pilot cases. And if you do, we'll consider, giving you more of these fraudulent claims to go chase up. So what they actually did here is they gave Manolete around about 111 cases. 72 were completed with an average duration of around 11 months, generating around 1.5 million of settlements, of which over 1 million has already been collected in cash. By far the most successful pilot recovery project undertaken by a UK financial institution. So, and net recoveries were split 50-50. So they had a pretty decent hit rate of around 50% of getting some of this money back on these fraudulent cases. I think previously to Manolete taking on, the government and Barclays were something like a 10%, maybe even less than that, maybe a single digit. So a big surge up in the money claim back for the government and these banks. Now, the thing is that this was right when the general election happened. So this was in, I think, the back end of 2024 into 2025, and then we had a general election, so we switched the current government in power. Now, the current government in power have basically have shown no interest in carrying on this pilot, which has been a little bit frustrating because, as we can see here, it's been very successful. We've claimed the money back for us, the taxpayers, the banks at the moment. It's been very successful, and basically the government are not acting interested. And you can see this headline here from, I think it was the Times. Yeah, the Times. Government dangerously flat-footed about recovering COVID fraud. So this could be a big wild card, because you'd think if we had the last government still in power, they probably would have continued with it. And for some reason, the current government don't want to continue with it. But you'd think at some point they will continue with it at some point, especially when you look at the results here. Now, obviously that's kind of stopped at the moment, but that could be a wild card if that obviously comes back in, because there's, I think there's a crazy amount of, COVID fraud that happened that Manolete could potentially take on here. But even without that, if we look at the current trading year to date in financial year 26, they did a strong start to the new trading year. And if you actually go on Stockopedia, you can see this actually ended up, if we look at the analyst forecast, there was a nice little bump up in the analyst forecast for this year on an EPS point of view. So they came out with a head of expectations trading update. And they said that as of June 20th of June 2025, the company had already signed 56 new cases, 27% more than the 44 signed for the whole of the first quarter of the last financial year. So at the moment, a lot of increases in cases going up at the moment. It also said here that for Q1 financial year 2026 to date, Manolete has purchased 5 cases with a headline value of in excess of 1 million, compared to the 3 1 million headline claim cases for the whole of Q1 financial 25. Now, I tried to find a slide of this, but I couldn't find the slide that I saw previously. It might have been on another presentation, maybe the one that did at Mello. And basically, one of the things that is also going to be a big benefit for someone like Manolete at the moment is what obviously there's been a lot of insolvents cases at the moment, liquidation cases going on at the moment, and there's been a bit of a increase. Now the thing is at the moment the companies that are starting to have these cases are the weaker companies, the smaller companies, the companies that don't have as much big funding when they get into the sticky situations. So the claim cases for them tend to be a lot smaller. Now what we're starting to see is the companies that were maybe a bit bigger, able to get a bit more funding, had a little bit more cash. The issue is what's happening now is they're now starting to financial struggle. Now they got away with it for a little bit coming out of the COVID situation because bit bigger, a bit more cash, maybe had that access to capital. But now that they are starting to struggle as well a little bit in this environment and get a little bit more to normality where these bigger cases are coming through, what that means is when it's these bigger cases, bigger headline value, it costs Manolete no. Between if you say like a 200k case and a 1 million case, it doesn't cost Manolete anything more on the cost point of view. So if it's a 1 million case, the 1 million case is going to make them far more profit. Now what we're seeing at the moment is these bigger cases are starting to come more and more like how they were normalizing before COVID. So with these bigger cases, Manolete's going to make more money off them. And as you can see here, there was 3 last year and you're up to 5 now, which is obviously great for Manolete at the moment as well. So what you're seeing at the moment is you're seeing these big increases at the moment of these cases, and the case value is increasing, which is a great combination for them. Now I guess the big thing is there any risks with this company? And obviously, yeah, there's always risks with a company like this. The one issue I would say is the capital structure. Now that's when you look at the balance sheet, for example. Hard to kind of look at the balance sheet because 28% debt to equity, currently 30 million in cash, but because of the capital structure, because they've got to go buy these cases basically, that could be a little bit of an issue when they go out and buy some of these cases. So you've got to be something a little bit aware of that. The other thing that I would say at the moment is that you've just had a change in the CEO. So literally on the 11th of August, basically the CEO, the founder, after I don't know how many years, 11 years since the company was founded, has moved away from the business. And whenever the founder leaves, you're always be like, oh, that's not good. So that could be something just to be a little bit careful of. And then there's the new CEO coming in. This new CEO is an internal appointment, which is probably a good sign. I can't remember what role she had previously inside the company. Oh yeah, the managing director. So yeah, internal promotion, which is pretty good. Now, obviously, you could see this as a bit of a negative because obviously the CEO leaving, why is he leaving? Especially when you look at the company is starting to turn around at the moment. Why leave now? That could be what you look at as a bit of negative. I've seen a couple of other cases out there where a lot of people are saying, well, maybe that he is leaving businesses because it's turning around now. He's getting to a bit of a older age, retirement. Has been doing this business for years. Maybe he just wants to walk away a little bit. A few people are out there suggesting that maybe it's a takeover target. The financials are starting to turn a little bit. If you're buying this company out, would you want the founder to be in place, or would you like there to be a succession plan ready? Because obviously he owns a good stake in the business. If his stake of the business is taken out, will he want to be there? Probably not, especially considering his age. So you get the new CEO in ready, that if someone takes it over, some investment firm, that there's the new CEO in place, ready to go. Maybe that's the reason why. We don't know. So that's the other little speculation that you have going on with the business. But ultimately, when you do look at the company from a financial point of view, we are expecting from 30 million to 31 million of this year, then 35 million. And you can see here from a profit point of view, we expect the profit to increase dramatically at the moment. We're currently around about 19 times earnings, but then we're going to drop down to 13 forward times earnings. When I was buying this, it was actually 10 times forward earnings, so it was slightly cheaper. So when we look at the number, let's look at the number point of view. So I put 6, 8, 10% revenue growth in, 8, 10, 12% profit margins in, around about 18 times earnings, which is roughly about right now. And you got 45% on the low side, 94% on the mid side, and 151% on the high side, which is good because obviously, at the end of the day, you're still going to make some money on the low side with numbers that are not amazing. On the mid side, nearly that 100% return I look for. And then on the high side, you got that 151% on the high side. Now, the other benefit with Manolete is that when, previously when this company was completely firing on all cylinders, this company actually had very good profit margins. You can see it right before the whole COVID situation, 16% profit margins, 20% profit margins. Right before COVID, 30% profit margins, 40% profit margins, 36, 32, 30, 28, 26. So it used to have significant profit margins. Now, if we do have this situation where we have these bigger cases coming where they make more money on it, obviously, like we said previously, that all flows to the bottom line. So like we said on the trading update, where we see at the moment the headline value of 1 million compared to 3 of 5 cases compared to 3 where they are last year, could be pretty significant, because obviously if they're taking a decent cut off there and that starts flowing back to the bottom line, obviously that's really good to see. So not saying that will happen, but just for example, if we do change those profit margin, let's just say to a 20% profit margin, not a 209% profit margin, also you're up to a 300% upside. Now, like I said, I don't think this will happen, but obviously, like we said previously, they used to have like 30, 35, 34, but major profit margins. So if they were ever to get back up to like the 30% profit margins, then you got 500% upside. So what I'm doing here is I'm just playing it from a point of view of that if they do okay and make good money, if they get anything close to where they were at pre-COVID, where they get to 20% profit margins, 25% profit margins, obviously that's where it starts getting exciting. Now, as you can see here, they are expecting, analysts at the moment are expecting that little ramp up at the moment as those, because obviously as these companies are increasing, we're seeing the cases increase at the moment. By the time the settlement happens, they actually come through in like 12 months time. So what's happening right now isn't going to come into the numbers until 2026, 2027. So that's when you start looking at the forecast here, and you can start seeing the revenue growing 10+%. And the year after that, analysts are actually expecting revenue to grow nearly 20%. That's where you can see that, the profit starting to ramp up to 5 million by what's forecast by 2028. So the surge in cases at the moment isn't going to start coming through until 1 or 2 years time. So for example, where it said 2028, my high side here of 5 million, what we saw in 2028, I've got that down for 2030. So you could argue the case that even analysts are probably looking at 15% profit margins. So yeah, that's why I bought it. I look at it, I think I make okay, decent money. The really exciting thing is if they get anywhere close to the old profit margins, while these cases are starting to surge up a little bit now. And then the wild card you have at the moment is there a potential takeover at the moment. So with all that's going on with the CEO change. So yeah, that's what kind of my current thought process on Manolete. So we'll see what happens at the moment. I think it's a good play considering where the UK is at the moment. And as we see, the cases are surging up at the moment. So yeah, the key thing to remember is that, all these cases that are coming through at the moment are cases from like the start of 2024. So when we start getting all of these increased cases now, they'll start coming into the numbers in 2026, 2027. So we'll see then if it was a right idea. So yeah, we'll see what happens. I hope you enjoyed it anyway. Like I said, I think it's a good idea considering where the UK is heading at the moment. A little bit of a curveball to, if the UK is going to suffer a little bit, hopefully these guys are going to benefit from it. So a little bit of a cover for myself as well in this UK space at the moment. So anyway, thanks for watching guys, and I'll see you on tomorrow's video.